Welcome back. For today's Business Matters, we have Don Ma here with us. Don, what's happening today?
Well, a lot to go through today, and great to be with you guys, Fiona, Chris. So let me just get started right away. So stocks rallying on Wall Street today. All three major indexes ending in the green. Dow Jones up over 1% here. S&P 500 up 1.7%, and the Nasdaq up over 400 points right here, about 0.4%. So two big movers today are two brands that actually we're very familiar with. So Starbucks sales up almost 25%. Today, Chipotle sales down 7.5%. Chipotle CEO leaving today to take over at Starbucks. We have more on that in just a moment. And let me just make a quick mention here on NVIDIA. The chip maker up 6.5% today. All right, credit rating agency Fitch downgraded Israel's credit rating. The company cited worsening geopolitical risks as the war in Gaza drags on. And at the same time, the firm indicated a further downgrade is entirely possible. And the ratings agency said in a statement that in its view, quote, the conflict in Gaza could last well into 2025, and there are risks of it broadening to other fronts. So earlier this year, Moody's and S&P Global also cut their credit ratings for Israel. Now, let me just explain real quick here. A credit rating downgrade for a country means sort of decreased confidence of a country's ability to repay its debts. So a downgrade typically indicates a higher risk of default. It could also impact investor confidence, making it more difficult for the country to attract foreign investment. So real important here. All right, back here in the US, small business confidence jumped to the highest level in nearly 2.5 years. However, with that being said, it is still the 31st consecutive month last month below the 50-year average. And this is the latest reading from the National Federation of Independent Business. So business owners said that they anticipated higher sales, but the road ahead remains tough. That's what the NFIB said. They continue to worry about inflation, small business owners, that is. So 25% of owners reported that this was their single biggest problem, but fewer reported raising worker compensation and prices. And next, Vice President and presumptive Democratic presidential nominee Kamala Harris is featured on the cover of the latest issue of Time magazine. So the article talks about Harris's path to becoming the presidential nominee. But however, despite being on the cover, Harris's own voice is notably absent from the piece. The article noted that Harris declined to sit down for an interview with the magazine. Now, China-related story here. More trouble for the country. Morgan Stanley Capital International dropped 60 China stocks from its indices, part of a long trend here. So the story of China's economy sort of continues down a dark road here. Let's have more on that.
More bad news for China's economy. Morgan Stanley Capital International, or MSCI, has dropped 60 China stocks from its indexes. Trillions of dollars in managed assets use MSCI as a benchmark.
People are going to take money out of China because they want to mimic the index. Now look at the economy, it is clearly stumbling.
China expert Gordon Chang says this is part of a larger trend.
MSCI dropped 56 Chinese stocks in May and 66 in February. So it's clear where this is all going. And it's a real indication of the problems inside China.
Chang says Communist Party policies are isolating China from the rest of the world. And this is making Chinese stocks less attractive.
If you look at the MSCI China index over the last year, it's essentially had no growth. And that's not good as an investor.
Economist Riley Walters says there are still many Chinese companies in MSCI's indexes, but he suspects more may be dropped in the future.
Foreign direct investment pulling out at historic levels. We're seeing no demand. We're seeing manufacturing employment decrease. They're in a downward cycle right now. And, people, they have different terms for it. Doom cycle might be one of them.
Walter says China's economy will have to crawl up a high hill to regain the confidence of international investors.
Now, big inflation data out today. The producer price index, which is a key inflation gauge, It's showing that price hikes slowed in July. So the index is measuring average price changes seen by producers and manufacturers. So what this is saying today is that we're seeing about 2.2% in terms of the PPI today, and this is according to the latest data from the government. And compare that to the previous one, it was at 2.7%. So a big pullback here. The producer price index serves as a key measure and potential bellwether for retail level inflation in the months ahead. The report sets the stage for an even more crucial reading on price hikes due out tomorrow. We'll have coverage on that, of course, and that is going to be the consumer price index, and it provides a critical look at how prices are changing for consumers rather than producers in their everyday lives. And let's talk a little bit about oil here. The MidEast could be on the brink of a regional war, and the tension is causing global consequences. Iran claims that it has the right to go after Israel because that the country killed a Hamas leader on its soil. Multiple sources say that a full-scale attack could happen any day, and the U.S. military is poised to potentially intervene if that happens. So on the other side, Iran has proxies in several Mid-Eastern countries, but direct involvement isn't the only way the conflict could affect Americans. It's already pushing up oil prices, as Amy Kiley reports now.
Escalation remains a big concern.
Fears of a potential Mideast regional war are having global consequences. Israel is battling Hamas and has been exchanging rocket fire with Hezbollah in Lebanon. That group is an Iranian proxy.
We want to make sure that it doesn't create a situation where there is a direct conventional military conflict between Israel and Iran.
Such a conflict could bring in allies on both sides.
The United States then has a choice to make in terms of how it wants to try to respond very directly. Is it just to help defend Israel, or is it to go after those capabilities that the Iranians or their proxies might use to harm the United States?
Meanwhile, the tension is increasing oil prices, with U.S. crude jumping 4.2% yesterday and Brent crude gaining nearly 3% the same day. Traders worry a war could stop the flow of oil in the critical Strait of Hormuz.
Iran exports about 3.5 million barrels a day through the Straits of Hormuz. Israel, with our support, has the capacity to go after the Iranian Navy.
The State Department says it would prefer a more peaceful resolution.
We continue to believe a diplomatic resolution is both achievable and urgent, and we continue to be engaged in diplomatic talks.
So as I mentioned earlier, Starbucks is going to get a new CEO. The company said that it's going to replace CEO Laxman Narasimhan with Brian Nicole, CEO of Chipotle. So this ouster comes just a year after Narasimhan took over the role. Sales recently dropped 3% globally as stores open for at least a year. The CEO's tenure faced challenges with weak sales in the US and as well as in China. And the change at the top also comes as Starbucks stock has fallen 17% for the year. Now, Nicole has been leading Chipotle since 2018, and during his tenure, the chain's revenue grew nearly 800%. So Nicole will formally assume the role on September 9th, and the announcement today prompted a 10% increase in pre-market trading for Starbucks shares. Now, President Biden is set to announce up to $150 million in funding for research aimed at improving the outcomes of cancer surgeries. So the announcement today comes as the president and first lady visit Tulane University in New Orleans. The funding is part of the White House Cancer Moonshot effort he first launched in 2016 as vice president, and that was after the death of Beau Biden. Biden relaunched it 2 years ago with the goal of cutting the U.S. cancer rate by at least 50% over the next 25 years. And the money is going to 7 universities and a company that provides the medical imaging used by cancer surgeons. The team are collaborating on a program aimed at making tumor removals more effective. Now, buying a home can be a daunting task, I know, and in this economy, it may seem out of reach. But if you're a military veteran or a service member or eligible family member, there are great programs out there to help you out. And one of those is a VA-backed home loan. Take a look.
A great benefit for those who have served in the U.S. military is a VA home loan, but many either don't know the details or how to make it work for them. That's where doing your research and talking to the right professionals makes all the difference.
The very first thing I discuss with a VA home buyer is make sure they qualify.
Jeff Wittenbach is a military veteran who became a mortgage loan officer after retiring from the Navy. He focuses on VA loans and helping veterans achieve home ownership. There are many benefits for someone using a VA loan, including no down payment required for most borrowers, competitive interest rates, and it's a lifetime benefit. While most veterans will not need to have money for a down payment with this loan, you will definitely need cash to close.
So in the state of California, I estimate about 2 to 2.5% for closing costs to close the loan. So that will cover your title, insurance, and escrow compounds. Anything needed to close the loan.
Wittenbach recommends these tips for all his clients. Do your own research, shop your own interest rate, know the difference between origination and buying points, know your credit score, and always work with VA-savvy professionals.
If you're thinking about buying, just talk to a mortgage professional, go over your DTI requirements, go over your paperwork, check assets and income, and get a game plan in place.
All right, just a few more things that I found interesting today. Boeing posting a rare win over Airbus in last month's orders for new planes. So Boeing took in gross orders for 72 new planes in July. Now, compare that to Airbus, which was sitting at 59, so a bit less compared to Boeing. Now, but if we step back a bit, looking at the full year here, Boeing had only 186 net orders in the first 7 months of 2024, and that's less than half of the 367 net orders Airbus had so far this year. It is worth noting that deliveries are crucial to Boeing's attempt to return to profitability. And Google today unveiling a brand new lineup of its smartphone today. Pixels are what they called. Following other phone makers' footsteps, Google has integrated artificial intelligence technology into its latest flagship devices. So other than the base Pixel 9, the rest of the phone lineup has gone Pro. And here's more on that.
Google showcased its newest line of Pixel devices and focused on Google's AI features from Gemini on Tuesday. The Made by Google event was held at the company's headquarters in Mountain View, California.
So we're going to share Google's progress in bringing cutting-edge AI to mobile in a way that benefits the entire Android ecosystem.
The company heavily featured its AI technology, showing features of being able to add people in photos after they've been taken and voice assistants. Phones include Pixel 9, Pixel 9 Pro, a larger Pixel 9 Pro XL, and the Pixel 9 Pro Fold.
And we've heard from Pixel users that just because they want a Pro phone doesn't necessarily mean they want a big phone. So for the first time, you can choose between Pixel 9 Pro and Pixel 9 Pro XL without compromises.
The Pixel 9 starts at $799 and the foldable version starts at $1799. Pro versions have triple cameras in the back and can zoom up to 5 to 10x. The new Pixel 9 lineup will also be the first Android phones to be able to use satellite SOS. Also, the Pixel Watch 3 is now available in 2 sizes. Also on the Google Store is the Pixel Buds Pro 2 wireless earbuds. The products are currently available for pre-order.
And last thing here, it's already that time of year. Summer vacations are coming to a close, and several school districts across the country, including the nation's largest in Los Angeles, heading back to the classroom this week. And along with the new school year comes new expenses. Here's more.
School is back in session, and with it, big spending.
We're expecting consumers shopping for back to school and back to college to spend at near record amounts following last year's historic highs.
The National Retail Federation estimates families with children in elementary through high school plan to spend on average nearly $875 on school supplies, clothes, and electronics. The reason?
Electronics are a much bigger portion of back to school and college spending than they used to be. Kids these days, whether they're in elementary school, middle school, or high school, are usually attending class equipped with some sort of electronic device to aid in their learning.
It's even more expensive for college students who are expected to spend more than $1,300 on average for the upcoming school year. Elizabeth Moore, a shopping expert with Retail Minot, says there are ways to save.
One thing that parents should be aware of is their opportunity to stack sales with other discounts.
Moore also says start shopping early. This will help spread the cost and maximize the chances of finding a deal.
The data that we have from the record-breaking Amazon Prime Day this year shows that many parents actually started their back-to-school shopping with their midsummer sales all the way back in July.
Shopping smart can help stretch your dollar further this school year.
All right, and with that, you guys, about all the major things that's happening today.
Well, we're not done with you yet, Don. You talked about the producer price index showing that price growth slowed in July. It could be an indicator about a positive sign about inflation slowing possibly, but analysts I spoke to, like Peter Earle, senior economist at the American Institute for Economic Research, are basically saying that a recession is pretty much imminent this year.
Well, you know, when it comes to recessions, it's for sure that the U.S. will experience one sooner or later because it's part of the economic cycle. You have to have recessions. So the question is when we're going to have it. Is it going to be this year? Is it going to be next year? It's hard to predict, but some indicators are showing that one is potentially on the horizon.
Well, that's some cheery news. Don Ma, thank you so much.
All right, thanks you guys.